This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Paul Martin with Investor Connect. Today we're here with Amos Schwartzfarb of Techstars. Amos, thank you for joining us.
Yeah, thank you for having me, Hall.
Great. So how did you get into the early stage investing world?
So that's a great question. I ask myself that all the time. I got into the startup world back in the mid-90s in the Bay Area. And really for the past over 20 years, all I did was operate in early stage companies. And I when after an exit with Black Locust back in 2012 or 13, Techstars had first come to town. And I met Jason Seitz, who was the then managing director of Techstars. And we just got to talking a little bit about Techstars and early stage investing. And I had done a little dabbling before then, but nothing serious. It was mostly friends companies. And at that time, I actually got involved by investing into the local Techstars fund. And this was before I became an employee of Techstars. And then fast forward a couple of years later, when Jason was moving into a new role within Techstars, he asked me if I would be interested in coming and becoming the managing director. And it was for me, the timing was right after having been an operator over the course of over 20 years in 6 different companies. It felt like the right next move. I had thought about sort of dabbling in it for a long time. And 3 years later, here I am, having made 30 investments through Techstars.
Wow, you've got quite a group there. Techstars is a really great program. What's the investment thesis behind that, and what do they look for?
Yeah, so every managing director is a little bit different. I think at our core, we run from a similar theme, but we're all a little bit different. So let me break this out into 2 parts. Part 1 is that there are 2 different types of accelerators inside of Techstars. There are vertical accelerators and horizontal accelerators. The majority of them are vertical. The program that I run in Austin is not that. But a vertical accelerator is something like our partnership with Target, where we have a retail accelerator, or we have a mobility accelerator in Detroit. We have IoT accelerators. We have partnerships with Barclays around fintech. So those are examples of vertical accelerators. For horizontal accelerators, it really comes down to what's interesting to the managing director. And for me, it really comes down to 1 or 2 key things, and it's mostly around team. And this has been, in all being fully candid, this is something that's evolved over the course of the last 3 years and continues to evolve. But in the last year, what I've really focused on is, do I have conviction that the CEO and that the founding team have the ability to build a really big business, regardless of what industry or sector or business that they're trying to build? And if I can't get that conviction, I don't really care what's next. I don't care what they're doing, and it's not interesting to me. But if I can get that conviction, that sort of the next 2 things are, do I think that it's the right CEO to build the business that they are actually building? And how interesting is that to me? So those are 2 different things. So it can be an incredible team that can execute. It could be the exact right team that's building the business. But if I don't also believe that I can get really passionate about what the team is building, it will not likely be something that I invest in. And the reason behind that is we roll up our sleeves pretty high in working with all of our companies, and we look at these as 7 to 10 year relationships at minimum. And so I want to be really convicted, not just that it's an interesting team, but that it's an interesting product to be working on over time.
So team is usually number 1 on every investor's list, but what do you do to make the assessment of that team that's different from other groups?
Yeah, there's a couple of things, and I don't know that these are different, but this is just my process. And one of the things is that I try really hard in the first and sometimes even the first 2 conversations to not talk about the person's business at all, or at least not very much. Sometimes it's the one thing, or often it's the one thing that's bringing us together, so we'll touch on it. But our conversation, the parts of the conversation that I'm driving are around understanding who the person is, where they came from, what makes them tick, why they do the things they do, what motivates them. And another thing that I do is I try to get them to ask me a lot of questions because I want to see the kinds of things that they're interested the way that they think about the world, the way that they ask questions, what they're interested in learning about, what's driving them to know more. And so for me, that helps me figure out, one, is there the potential for a rapport? How do I get along with them, right? Because I can get along with someone great and you may not, right? So there's that dynamic. And then in the things that I try to also tease out of that are, what have they been like in their past? Are these people, is the CEO someone who has a track record for getting things done, right? They may be a first-time CEO, but are there how were they as a student? How were they as an athlete? How are they in the extracurricular activities that they participate in? What are the things that drive them? And how do they approach those things? Are they competitive? What happens when they lose? What happens when they win? How do they present themselves when they're telling stories to me about themselves and their experiences? And so that's really, I spend a lot of time on that, trying to figure out, like, is this someone that I want to get to know better and learn more about their business?
Well, you see a lot of teams go through the program, and raising funding is a critical part of that process. In your mind, what does it take to raise funding when you're at that stage?
I believe that there's sort of three critical things that every really good CEO needs to be able to do. The first and foremost is to build and to drive a metrics-driven business. And so even when you're pre-revenue, even when you're pre-product, there's still a way to look at your business, and every business is a little bit different, that helps you drive results by looking at the data and the metrics. I look for that in people, or for the ability to learn those skills. Most of the time, it's the latter. Most of the time, the entrepreneurs still need to sort of hone those skills. But first and foremost is, can they be a metrics-driven CEO? That's very, very important, I think, for raising funding. I think because everything I'm going to say after this stems off of, are you metrics-driven? And I think if you do these three things really well, your ability to fundraise will go up exponentially. So the first is to be metrics-driven. The second thing is to learn how to articulate your business to anyone, anywhere, in a very succinct manner. And so that's going to change from audience to audience. And I think that my opinion is that the more metrics-driven you are, the more you will understand your customers' buying habits, how your business works, and it will give you the ability to articulate your business that much more succinctly. So one is being metrics-driven, two is being able to truly articulate your business very succinctly to anyone, anywhere. And then the third thing, which is going to sound really obvious, but it's learning how to actually ask for money. What are the methods? What are the strategies? What are the different approaches? And what's the language that you should use depending on where you are in the process, who you're talking to? And there's a lot of nuance around that, but it's really those three things. And I think if you can do those three things really well, right? So be metrics driven, articulate your business really well, and understand the nuances of actually asking for money, it substantially increases your potential for fundraising.
Well, some people are good at raising funding and some are not. Some are successful in raising it at the stage and some are not. Who is successful and why? Obviously, if they hit these three things, they're probably going to be successful. But what are the other factors that determine they're going to make this or they're not as far as raising the funding to take the business to the next level?
So I think focusing on, these are all some of the nuances that come out of what I talked about, but building a rapport with the people that you're trying to raise money from, right? If you sit down with someone in your very first meeting, you're just focused on, will this person write me a check? And that's what your focus is. Your chances of getting a check are likely very, very small. There are very few people that are just going to open their checkbook freely to do that. And it's my belief that it actually takes a lot of time building rapport with the people that you're hoping will write you a check one day, so that they can build up in their mind a story of what they believe you're going to do, which ideally will align with the second thing, which is becoming a really good storyteller, right? And that's not fantasy. That is, what have we done? What are we doing? And what will we do? And how do you tie all of those dots together to create a really beautiful and eloquent and believable story that you can actually go and execute on? I think it becomes a lot easier to do that when you think about, okay, I'm going to be raising money in 6 months. I'm going to be raising money in a year from now. Who are the people that I should be talking to now? And starting to build that relationship, and for them to start to understand the story that I'm creating, so that when I get to that point, they already know all of that and I already have a relationship with them. And an example that I love to use is Deepak Sekar from Chowbotics, which was a Techstars Austin company in 2016. He has successfully raised a couple of rounds. His methodology is I am talking to my next round people before I start raising my current round. So as an example, they will sometime in the future be going out to raise their B round. They were talking to potential B stage investors in parallel to when they were raising their A round to say, hey, we know we're way too small for you and we're way too early for you, that you only invest in later stage companies, but we want to be on your radar now. We want you to see what we're doing now. We want you to build a relationship with our current investors because we think you're the right investor for our next round. And because of that, when they do go to raise that round, it's going to make it much, much easier for them because I see firsthand the interactions that are happening because there's no pressure on either side. They're just building a rapport and a relationship and a story together.
Well, that's an interesting thought there. If an investor is interested in investing in your deal, how many of your companies know what that is? How many know why the investor is investing in their deal in particular? How many do you think that is?
Gosh, I would like to think it's an increasing number because as I see proof of this method work more, I'm trying to instill it more. I think that as investing as a professional is a 3-year-old sport, or I've been doing this for only 3 years. So I'd say companies from 2 years ago, not quite as well as companies that are currently out there. But I am seeing it, and it's an example in the most previous Austin class, most of the companies actually had closed their rounds either before or during Techstars, and we're not raising at demo day. Most of them were not. But one of the things that we do here in Austin, as many people that are local are aware, is that as part of demo day, we have 3 days of investor meetings prior to demo day where we're curating one-to-one meetings only with investors that might actually be interested in that company. That's an aside from something that we do special at Austin for our company. But the thing that the strongest CEOs are doing is that they're doing just that. We're recognizing together who are the potential investors for the future. And they're going into those meetings saying, really excited to know you. Here's why we think that there might be a match in the future. No pressure on anybody right now. And so I'm seeing more and more of at least Techstars Austin companies are doing that. And I'm starting to see it pay off as some of those companies are now raising rounds. And I have 3 companies actually that are in the middle of rounds right now that are all with investors they were talking to over a year ago when they weren't raising.
And then the counter question is, who is not successful and why weren't they? Obviously, they didn't build a rapport or didn't take the lessons to heart, but where do you see the failure points come in?
I think that there's a couple of different things that I've seen, right? And I'm thinking with my Techstars hat on for a minute. The 2 things that I see often happen are, one, it's location specific, which means it's a company not from Austin. They built a network in Austin. They're going back to a location that doesn't have a very active angel scene. And so it's harder for them to raise because there just aren't a lot of people who understand that. And so we're working on ways to sort of bridge that gap. The other thing, which I think is a lot more prevalent, which is that the CEO and the founding team may not be building the business for the right reason. And it's something that I told you how I think about looking at companies, but it doesn't mean I get it right every time. I definitely don't. And I think that sometimes what we'll see is that the team isn't building it for the right reasons, and that the investors can see through that either there's not a long-term play here, that the CEO or the founding team might not actually have the ability to bring this all the way through into building a big company.
Well, great. Well, that's good advice for the entrepreneurs listening on the show about getting ready to raise funding and what it takes to do so. Certainly echo that advice of building a rapport with the investor. My experience was the same, that those who build a relationship get the funding. Those who don't build a relationship don't get the funding. It's pretty clear. And then it's an interesting thought there about not building the business for the right reason. I find that in funding, entrepreneurs in some ways can be very transparent about what they're actually doing, and investors pick up on that. And I don't know if all entrepreneurs really know how clearly investors are seeing these things from the other side and making decisions based on that, for sure.
I completely agree with you.
So in the last minute we have here, what else should we cover that we haven't so far?
I think this is just a thought, and then we can take this in any direction. But I think that for people that are building a company for the first time, especially, really think critically about why you want to build this company. And personally, it's a big red flag for me when I hear I've always wanted to start a company, or I've always thought of myself as an entrepreneur. To me, those are flags of aspirationally wanting to be something without truly understanding what it means. And not that those people can't be successful, but I think when push comes to shove, when things get really, really tough, and they always will get tough, it makes it a lot harder for those people to persevere through those tough times versus someone who is building the business that they're building because they really shouldn't be doing anything else in the world at that moment. They were put in this world at that moment to build the business that they're building. And so I'd say for those people that, like, if you truly have always thought of yourself as an entrepreneur and you've always wanted to start a business, that's great. And it doesn't mean, don't take what I'm saying as you shouldn't go do it, but think about the thing that you're going to go do and don't sub-optimize for starting a business. Optimize for doing the thing that you absolutely should be doing, where there's nothing else in this world you can imagine yourself doing right now, because that's really what it takes to have the hope of potentially building a successful business.
So the core passion needs to be around what the customer you're serving or the business you're running, and not just the idea of running a business and being the next CEO of a big company, which can be kind of ethereal.
That's right. I believe that. Yeah. I believe that.
Well, good. Well, I appreciate you taking time to share those thoughts today. How best for the audience to get back in touch with you?
I think the best thing to get in touch with me is just to email me at amos@techstars.com, AMOS@techstars.com. I answer pretty much every email that I get. I'm not always super fast on email, but I do try to respond to every email that I get.
Well, great. We'll put those in the show notes and have people get back in touch with you, and hope to have you come back and give us an update on how things are going at Techstars here soon, and learn more lessons about how to raise funding and run and grow a startup business. But I appreciate you taking time to join us today.
Yeah, thank you so much for having me. It was great to be here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.